Hey guys, what's up? This is Andrew for TRENDLINES.com. So I'm here to make a huge update, guys, on AMC. Friday session was the day where we actually reached 35 finally. So I'm very excited to see with you guys everything that happened during this week and give you my predictions for the coming week. Let's get into it. So we finally reached 35, guys. I'm calling for this level since I've actually started my channel. You can go and watch all my videos when AMC was trading between 5 and 10. I was already talking about 35. So I think the first thing that is interesting to do in this video, guys, is to remind you how I found this level. So I got it using two different methods. And then here you can see that I already did a lot of Elliott wave counting. It took me actually a very long time this morning. So we are Sunday morning here in Hong Kong, and I spent like between like 1 and 2 hours to try to, really find all the different scenarios that I'm going to give you. And as usual, guys, I'm going to give you my preferred scenario, which is for me, the one that is the most likely to happen. So very quickly here, so 35, let's go on the weekly time frame. I'm just doing this very quickly because I think it's interesting, guys, to, stress something that has worked very well when it is, so that you guys remember what you can do to find those targets. So very basically, it's the all-time high, guys. So this is the first method, but this is usually not enough to actually find a target where you have like, say, 80-90% chance to have a rejection. So this was the first way to do it. And the second way is just by using fib extension, guys. And I showed you many times, but maybe some of you are watching my videos for the first time and you probably won't go check all my videos I did in the past months and like 2-3 months. But I've shown you guys this method a few times. You just measure the first wave. So that's why you need to associate Elliott wave theory, where you do this counting 1, 2, 3, 4, 5, 4 moves up, and ABC 3 waves for correcting moves. And then once you have your waves, you can measure them, guys. You measure it, and usually, the market is growing, and everything that is growing is following, in some funny way, the fib extension ratios and the fib retracement ratio, because Fibonacci is just the measure of growth. You can go check everything about this famous mathematician, but basically, he applies some theory to everything that is growing and the market is growing. So here we're going to use his ratios because they actually work very well in finance too. So to find the fib extension, you just measure the first wave. So I measure the wave from here to here, guys, my very first wave, and I apply then this whole wave ratios that I computed as usual using the golden number 1.618 to the bottom of the second wave. So here we have a 1, here we have a 2. And the 1.618 is the most likely ratio to happen, and it gave us 36.3, guys. So let's see where we went. We cannot be that precise when we use actually this long-term method, but it's funny because it went to 36.7. So you see, I had 35, I had 36, and actually this is what happened. So now I'm going to give you guys what you are here for and what I did this morning. So we go on the hourly time frame. I'm now going to give you all the different scenarios and try to help you understand what is coming this week and in 2 weeks. For now, it's very interesting. So we have two different scenarios that can happen. So I'm going to apply Elliott wave theory again. So here I told you we are in the third wave, guys. That's why I knew that we're going to have some very strong moves with strong associated volumes that are going to take back some major levels. So we took back all the major levels and we went to 35 actually a bit quicker than I expected, which is good because this is called momentum. So now the market has a very strong bullish momentum. And the question we're having is this third wave complete or not? So to know that, you go inside the wave and you apply Elliott wave counting the same way we do on the longer term. So here we have two different scenarios. So I'm going to start with the bullish case. So the bullish case is, like I told you guys, we can break down this fifth wave very nicely into 5 waves as well, inside of which the third wave has 5 waves as well. So this confirms that discounting is very good and that I'm going to keep it in both my scenarios. So the bullish scenario is that here we have completed this 1, 2, 3 that I told you about. I told you we're going to do the 4 and that at 12 we're going to have this very strong impulse that we had. So either this is a 3 and then we have 4 and 5 coming. So if this is the case, we can again apply Elliott wave theory that says that when the second wave, so I'm talking about the yellow counting here. So in this counting, the second wave here is a zigzag. You remember guys, this correction was a bit deeper than I expected. And usually when you have a zigzag in the second wave, you have a flat in the fourth wave. So my bullish scenario is that we do something like this. So we came back to 26. Why 26 guys? Because this was the level we had here. So I told you that we're probably going to come back either to 26 or 17. For now, we came back to 26. We gonna consolidate guys. We're gonna have here this fourth wave in my bullish case. That might be a flat. It might also be a triangle. We often have triangles as fourth waves. So if it's a triangle, you're gonna have something like this. You see? You're gonna have something like this. So either you have something like this, A, B, C, like the flat or triangle. I doubt we're gonna have a zigzag. So let's see. And my less bullish scenario is that here actually this third wave is complete. So up, and that we are like this. I call this the third wave guys because I want to remind you what is happening on the longer term. We have this 1, here 2, and here 3. So if this is the case, then we're going to have a fourth wave that might be a bit longer because it's a bigger cycle. So then we're going to have a correction. So here we had between a flat and a zigzag, so I'm not sure. We're going to have something like this, all right? So in both scenarios, either we have a small correction, small consolidation, that is going to be probably higher and stronger. So I expect this one to hold above the 26th level. Then we're going to have a fifth wave like around, the same time we need to consolidate for the second wave. So between 26th of April and the 7th of May, so roughly 10 days. So in the first case, we're going to have 10 days of consolidation. Then we break 35, probably going around the 70 area. Or we consolidate a bit more, guys. We can stay at 26, but most likely we would go slightly below. So I'm going to give you other levels that you can watch. And then we're going to do a fifth wave going as well to those higher levels. So once again, to find the target of my fifth wave, I measure the third wave. And depending where we're going to correct, guys, that's why it's important to know if we correct only to 26, then the fifth wave might go to 74. But if we correct to 16, which is very possible, if the correction is actually, if the fourth wave is the one of the higher degree wave counting, then the correction is once again going to be longer and deeper. So we might go here. It's like kind of the, I would say not worst case scenario, but almost. And then we would go only to 64. So we need to see first where we're going to correct. What is going to play out in the coming week. So once again, guys, I give you my first scenario, which is the one that is my preferred scenario. It's this one. So flat or triangle, I don't know, because we arrived here with a lot of strengths. So usually the market remembers when, you have such impulsive moves, it takes time before actually, before the sellers find the confidence to shoot those shares again. So I think that this is what is going to play out. So something like this, we're basically going to hover around like, the 26, 35 level maybe, and then do a final wave. And to actually know if this is what is on the table, we need to find some events that eliminate some scenarios. So here, the event that would eliminate this scenario is if we break 26, guys, all right? If we break 26 on a 4 hours time frame, this scenario is less likely to happen, and we're probably going to have the second scenario playing out. Once again, I show you the scenario is that the 1, 2, 3, 4, 5 is like this. All right, is that we already completed the 1, 2, 3, 4, 5 cycle, which is the third wave I'm talking about for a long time. And if this is the case, once again, the correction would be deeper and longer. So you have my two different scenarios, and 26 is the level to watch. to know if this would happen or not. Alright guys, so let's have a look a bit at the volume. So first, so you can see the average volume traded this week was 400 million shares, guys. So it's a lot. And I want to show you what we have on the option market. So here, once again, what I do, guys, as usual, I take all the maturities. So from January 23, the longer one, I mean from June to January 23. June, I take the 18th of June. It's the most liquid maturity to start with. The first two we had before the weekly, they have almost no positions. So I don't have them here. And I compute the delta of all these options using the volatility of each maturity. So the volatility is here, guys. You know, I just take the volatility on Yahoo Finance on every strike option that I have here. And then I do this formula, guys. I just multiply the option open interest by the delta, which gives me the exposure. I aggregate all this data and I have here the synthetic short exposure. So we had when AMC was at 12 around 10%, and AMC, guys, went to 35. So this made actually the market maker, it forced them to buy a lot of shares, guys, because you can see the short interest goes from 10% to 18%. So we came back to 26. So we have right now around 1.9 billion USD synthetic short exposure on AMC, which is around 70 million of shares. So you can see that when the market went from 12, where we had 40 million shares, to 26, okay, so market makers and hedge funds needed to buy 30 million shares. But here you can see that the gamma squeeze probably helped to trigger this strong move up. But once again, guys, look at the number of shares that has traded. 400 million shares. So it's much more than this, all right? The gamma did maybe 10% of this, but we had here probably some hedge funds cutting the short positions, waiting for this data to be released. For now, we don't have the short interest as of the 30th of April. So it would be the 28th of April on Friday, because it has not been released yet. It usually takes 1 week, you know, the FINRA reports. So I'm waiting for this number. We had 95 million of short shares on the regular market. So I'm waiting to see if right now we're going to have less or more, if hedge funds actually increase their position or if they stopped it. So it's going to be very interesting to know who was actually buying AMC when it went that high. And here I would be happy to see that this increased, because this would mean that despite the selling pressure put by hedge funds on AMC, the price action still developed higher in a very, very impulsive way. So this would add some weight to my actually first scenario. Once again, I show you guys that this is a 1, 2, 3, 4, 5 like this. So that basically this third wave is not complete. So the only little problem I have here is that this third wave here doesn't, you know, it has 5 waves inside it, but it's not perfect. I don't really like this counting. So I'm really waiting to see more price action here, to get more information to know if actually this third wave is complete or not. It's going to be a very interesting week. Once again, guys, the level to watch here is 26. I remind you, the scenario that I foresee the most likely to happen is something that we're going to consolidate here a little bit around 1 or 2 weeks maximum, like the ABC we had here, you know, doing a triangle or a flat correction. So most likely something like this. I don't really know. And then we're going to have this 5th wave. So this is for me the most likely scenario. So let's see what is playing out, and careful, 26 is the level we need to trade above if this scenario is to happen. So guys, that's it for me. I hope you enjoyed this video. And if you did, please don't forget to click on the sub, like and bell button, so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.